Hello everyone, we meet again. Before we start, for those of you who are coming to podcasts for the first time, our podcasts are released every day. If you find this podcast good and suitable for you, please share it with your friends about this topic. And please click on the subscribe button and the bell so that when the podcast updates YouTube will notify you of new videos. So today we will talk about part 5 about the journey to financial freedom. In the previous episode, we talked about the important step of setting up a financial management platform, how to make it safe and manageable. From planning and managing expenses, it helps us classify bad debts so that we can have a plan to eliminate these debts after resolving all debts. Bad debt, we also talked about setting up the cash flow to make it effective through this cash flow. It also helps us ensure that the foundation of our life is in accordance with our needs, and from there we begin to accumulate, and from this accumulation activity we will begin to build an account to use for other things. In the case of an emergency, which I call an emergency fund, we have also built a sinking fund to use for planned spending, and after having these solid foundations, we can step into the next stage. Investment phase, so that our money continues to generate more money. If any of you have not seen episode 4, I advise you to go back and watch that episode before continuing to watch this episode, because it is the most important episode in our entire journey. Now we come to our main content today, which is after accumulating investment capital, what methods do we have to start investing the money? Please note that the methods I mentioned in this episode are just basic methods for investing. Obviously, there are many other investments that I did not mention in this episode. My goal is to suggest to you ideas from which you can start your investment activities. As you gain more and more experience, you can think of other investment methods for yourself, and to get started, I want to share with you a principle that I think is correct, and in almost 99% of cases it is the same principle. The sentence that people often call high rate return. That means that in most investment activities, it will be subject to a rule that the lower the risk, the lower the profit, and the higher the risk, the higher the profit will also be high. Of course, there are still cases where the risk is low but the profit is high. I think that case is very rare, it is only in the remaining 1%. Now we will talk about the simplest investment method, which is savings. This is also the rule that I just mentioned above. This investment method is a very risky investment method. It can even be said that there is no risk, especially when you choose to deposit in large banks. And because the risk is low, its profit rate is not much. When I collected this number, I went to check the interest rates at some banks in Vietnam. Most of them were at 4 to 6% per year. So please remember to pay attention to these numbers, because in addition to being a basic investment channel, this interest rate is also a benchmark by which you evaluate your future investment activities. For example, when you open a coffee shop. For example, if you work hard all year but the profit is only 10%, it may be an ineffective investment. Because depositing it in the bank is already 5 to 6%, while I work hard and get 10%, sometimes it's not very effective. Also, through this matter, I also have a few words to tell you that in addition to deposit interest rates, you also look at loan interest rates. In particular, business loan interest rates mean what interest rates banks are lending to businesses. For example, at the present time I checked, the interest rate for business loans is about 7 to 9% per year. The reason I say you should pay attention to this number is that I see there are a number of projects they call for investment that have a rate of return of up to several tens of percent a year. In that case, you must immediately put a question mark on whether the rate of return is high. With such high profits, why don't those business owners borrow capital from banks themselves? Instead, they mobilize capital from individuals like you. If you can't find answers to those questions, you should stay away from that project when investing like that, because 90% of it is a scam. Next is a fairly popular investment channel in Vietnam, which is investing in real estate. Vietnam is a developing country, so looking at it from a macro perspective, I think it is a market. Real estate will increase even more. Personally, I have lived in a number of countries around the world, and I see that the current real estate price in Vietnam, although many people say it is high, is still high compared to developed countries in the world. Many times lower. For example, a luxury apartment right in the center of Saigon today is about 5 to 10 billion, which means somewhere around 200,000 to 500,000 USD, which sounds high, but for the same apartment. With the same central location, if it were in Sydney, it could be dozens of times higher than in Sydney, but it's normal for apartments in high-end projects right in the center to cost about $2 to $3 million. Therefore, from my personal perspective, the real estate market in Vietnam still has a lot of development potential. However, I have to say it again because it is a developing market, so according to my observations, the real estate market in Vietnam has some limitations. Firstly, the real estate market in Vietnam has a big problem: lack of information. If in Australia, I need to reset any information related to real estate buying and selling, I need to go to two websites, gumtree.com.au or realestate.com.au. From those two websites, then I almost have all the necessary information to make a decision. I know there are some websites like that in Vietnam, but most of the data on them lacks accuracy, so I don't have enough information to make a decision. This is not necessarily the website's fault. That's what's special about the Vietnamese market. Opinions about real estate. They tend to use those channels where they post some interesting sounding news. But when customers call to ask about that apartment, they will offer other apartments, so they basically use that channel as an advertising channel rather than a channel to provide information for it. Accurate, and from such reality, it leads to the fact that small investors like you will lack information to make accurate decisions. Second, the home loan interest rate in Vietnam is quite high. If you add in the interest factor, the problem may be a bit more complicated, but if you buy it all at once with your own capital, the amount of capital spent is very large because of love. With such a market situation, in order to invest in this real estate channel effectively, you must equip yourself with a lot of information and knowledge to minimize the risks. But at first I said that personally, at first I thought that the Vietnamese real estate market would still develop in the long term and in the short term in the next 1 to 2 years due to the impact of the epidemic. So I don't have enough information, so I don't dare say nonsense. Next is the stock market. This is the channel that accounts for the largest proportion in my portfolio and is also the channel in which I have invested for the longest period of time, and before starting I also make it clear that all my investment activities are investments in the Australian and American stock markets. So my understanding of the Vietnamese stock market is not much. There may be some ideas that I say that are not suitable for the Vietnamese market. You should listen to what I say from that perspective. These are examples and suggestions from which you can learn more, and then apply it to your own cases. When it comes to investing in the stock market, my knowledge is so vast that if I were to share it all with you guys, I would probably do 20 more episodes and still not have it all without mentioning what I know. Knowing is not everything. So, going into more detail, I will share with you my views on this investment and also emphasize to you that these are my personal views that may not be the same with the views of others. However, having said that, I have to say again, I am fortunate to be acquainted with quite a few big names in foreign investment, and sometimes when talking, most people support my view, and now I will share with you guys about this perspective. First and most important for me, when I put down money to invest in a certain company, I believe that it must be an investment activity, not a stock trading activity. Since I'm investing and not doing specific stock trading activities, I will share with you some basic steps that I often do when deciding to invest in a certain company. Please note that these are just the basic steps, as in reality I also do other steps. The first step is that I dig deep into that company's business numbers. Companies that are on the stock market, once they become public companies, must publish periodic reports to investors, and from these financial statements we can see whether the business is profitable or at a loss, good debt, bad debt. What are the fixed assets like? Where are they being depreciated, and how are the resources being used? Through these financial reports, I will have a preliminary view of the situation of those companies. In addition, I will also try to learn about many other reports, the purpose of which is to the more in-depth you understand about that company, the better. The next step is that I will look at the market that company is operating in combined with the strategies that those companies are aiming for. From there I will give my opinion as to whether the current operating situation with market potential plus such a development strategy is a potential company or not. After having answered this question, I will begin to ask the next questions about such potential and value. How is that company being valued? Because that reason is the company's. No matter how good it is, if we invest in it at the wrong time, when its price is inflated too high, it is not necessarily an effective investment. It's simple, but the answer is very difficult. In addition to basic indicators such as EPS and PE, we have to dig deeper into other data on the potential of the market and competitors in the same segment. How? And there is a lot of other information that we need to dig deeper to be able to answer this question, after answering the two questions above. Firstly, whether the company is a potential company or not. Second is the assessment of whether the company's value is reasonable or not and whether it will still grow in the future. Next, I will look at a factor that some people often ignore, which is what the company's leadership is like. This is the analysis step that is both logical and emotional. So that's why it's so important to me. There are many companies that have passed the above two steps, but at this step I decided to stop and vice versa. There are also some companies that I also ignored some of the weaknesses in the above two steps. Just because I believe in the management of that company. In fact, this is also the case with the company that has brought the biggest return for my portfolio to date. Through my basic sharing above, I hope you can see that when I invest in a company, I consider myself an investor and also from the same perspective. So usually when I invest in certain companies, I invest for the long term. It's not like I buy this week and then sell it again next week to make a profit. For me, that's stock trading, and stock trading is one thing. Works completely differently. That means people buy and sell stocks based on technical analysis to find the market's demand factor for that stock code, from which they make a profit through short-term buying and selling activities. Is stock trading, and for me, it is not investing. When I invest in a certain company, this is how I imagine it. I see it as a company of my friend. It is a company that I have followed for a very long time, and my friend also regularly sends me data about the company's business situation, and through that I can see that the company is doing very well and in good condition. The future still has a lot of potential for development, and besides that, I also believe in the leadership ability of my friend and other leaders in the company. From such observations, I decided I intend to give money to my friend to do business because I have faith that my investment will be very profitable in the future. That's the way I imagine when I invest in a certain company, and that's also the way I invest. My portfolio is not too big. There are people whose portfolios contain dozens or even hundreds of companies, but mine is very small. This seems to go against most investment advice. Because most people often advise not to put all their eggs in one basket but to distribute them in many places. And there are many people whose investment portfolios are terrible. I once saw a portfolio of several hundred companies. Because like I said, because my way is that I go into depth and research each company one by one, and I set a lot of criteria every time I invest in a certain company. So I should the number of companies that satisfy my conditions is not many, and that is why the number of companies in my portfolio is not too large, and most of them are these companies. This way of investing is the way I learned from very experienced investors around the world. Even Mr. Warren Buffett has a very famous saying that diversification can protect a portfolio from ignorance. But for those who know what they are doing, diversification is not much. Meaning, that means people are lazy to research and analyze the companies they are investing in, so they decide to buy many companies to minimize risks. Now I'm talking like I'm against diversifying your investment portfolio. In fact, I'm not against it. Even on the contrary, there are investments where I have a lot of diverse files, and for these investments, I have my own diverse file methods. Now I will share with you the way I will deal with the files that I have diverse files based on what I shared above. Finding potential companies is not easy. It's difficult even for people with a lot of experience. As for the vast majority of you who don't have experience, it's even more frustrating. So I understand that there are many of you who are interested in delving deeper into analyzing these financial aspects. The question is, in such cases, should you invest in the market? Whether the stock market works or not, the good news is still there. You still have another way to invest that is much simpler and also guaranteed to be safe and effective. In the stock market, there are a number of other types that you can choose from. You can also invest in ETFs, index funds, or futures contracts. Sometime in the future, I will have an opportunity to share with you guys about the perspective of futures contracts. In this section, I only talk about ETFs and index funds. Basically, these two types are quite similar. ETFs have some more specific features that index funds do not have. However, with the advice of if you're an investor, if you invest for a long time, these features aren't too important, so I'll combine these two types into one to explain once. The purpose of this fund is that they will track a certain criteria. Take the simple example of S&P 500, which is the index that represents the top 500 large companies on the US stock market. If you diversely file your portfolio and want me to track this index myself, It means you have to buy stocks of those 500 companies, which is very complicated, and sometimes you cannot be done for the simple reason that you do not have enough money to buy shares of all these companies. Even if you only buy one share of each company, it is still not enough. Index funds and ETFs were born with the purpose that instead of buying shares of 500 companies, you only need to buy one share of the ETF that they are tracking on the S&P 500, and that's it from now on. Whether the S&P 500 index goes up or down, the value of your stocks will also go up and down correspondingly. With this method, you will have a diverse file of your investments. A very wide range, and from there, it ensures a very high level of safety for these investments. In addition, there is an interesting thing that in the long term these ETFs or index funds usually they will tend to surpass these future funds in terms of profit rate. In the financial world, there is a very famous bet between Mr. Warren Buffett and a farm called Protégé Partners, a very famous farm in New York. Basically, Mr. Warren Buffett believed that in the long run, index funds would run out of funds, so he spent $1 million to put the code UIS to track the S&P 500 index, and as a result, Mr. Warren won in 10 years. That year his investment increased by 125%, while Protégé Partners only increased by 36% compared to Mr. Warren's 125%, and those are some of the reasons why ETFs and index funds are a simple but difficult way to invest. Effective for the vast majority of non-professionals. This is also one of the rare pieces of advice that I often advise my friends. The reason I say rarely is because I very rarely advise others to invest specifically in a certain company. If anyone asks, I will usually share my analysis or my ways of thinking, and from there they will do their own research and make their own investment decisions. In the last part, you will probably wonder why my two pieces of advice contradict each other. On the one hand, I still invest in individual companies. On the other hand, I recommend investing in index funds or ETFs. The reason is actually that it is also in what I just said above. When I invest in an individual company, I see it as giving money to my friend to do business, and this also revolves around the problem of high risk, high return. When I find something potential company, I will still invest in that company with the expectation that it will bring me high return. The way I do it is that I divide my capital into many sums of money for many different purposes. If I want to invest long-term, I will put it in an index fund or an ETF. The money that I accept more risk with the expectation of a higher interest rate, I put in companies and so on. Even the money that I put in the investment that it's very risky, and I consider these amounts of money to be opportunity costs. The key point here is how we must divide these amounts of money at a reasonable ratio. About this stock market, there are many other interesting things. If I keep talking, I may not finish talking until morning, but then there will be no time for other ideas. So I will stop here, and on some occasion in the future I will return to this topic later. In addition to the stock market, the investment channel is also one of my favorite channels. That is to invest directly in the business. You can contribute capital with friends to open a company doing business in a certain field, or sometimes simply open a clothing workshop. Or a coffee shop, for example. In my case, I work in the technology field, so most of the companies that I invest in are technology companies. In quite a few cases, are the companies I am advising. After a period of time, when I clearly saw the potential of these companies, I decided to invest a little in that company. Firstly, it belonged to my field, so I can give more accurate assessments, and secondly, I myself can also help participate in some operating activities to help these companies. Of course, the activities of these companies it will be riskier, but I see this as a form of high risk, high return, and you can do the same thing. Maybe your field is not technology, but you have the expertise. Other subjects, and from there you can draw your own conclusions when encountering certain potential investment opportunities. Through this section, I have basically given you a basic overview of investment channels from these initial views, so you can do more research and choose for yourself certain investment channels that you like. Fit. In addition, along with this investment, you should also continue to find new sources of income for yourself. It can be active income or, ideally, passive income. Passive income here means income that you don't need to do anything, but the money still comes right away. In the example above, if you invest in the stock market, in addition to being the value of its shares increases periodically depending on the business results. If the business situation is good, these companies will also share profits with the company's co-owners through that activity. Dividend and dividend income sources are forms of passive income. Another example could be if you rent a house. For example, let's say you have an extra house that if you bring that house to rent, every month these income sources are a form of passive income. Similarly, if you have a car that you don't use, you can rent it out, which is also a form of income. Passive income, and I'm sure you will think of many other sources of passive income. For me, passive income is very important because it is different from regular income. Dynamic means we are exchanging our time and effort for money. Time and effort are limited things, and passive income depends more on those two factors, so the amount of passive income we can create is unlimited, but the more sources of income like that, the more it will create a source of income for us, and from there we move back into the activity. The investment I just mentioned above, and these investment activities continue to create more money for us and have more money, then we go and set up other passive income sources and so on. Over and over, and that's why I often use money to make money for us, and just like that, our money printing machine will work faster and faster, and at the same time. At some point, it will bring you to the milestones of financial freedom. And specifically what those milestones are, I will talk about in the next episode, which is also the last episode of the entire series. This lesson. Actually, at first I planned to include the fourth stage in this volume as well. But it's been quite a while since I looked at the clock, so I'll probably stop here in the hope that through my sharing in this episode, you guys will have new interests. Regarding investment activities that reach this stage, your life is very financially secure. Investment activities at this stage, in addition to bringing financial benefits. For us, I believe it will be even more fun, so I hope that through this episode, I will give you a little more motivation about your financial freedom journeys. If you find the content I share useful, please share it with your friends. Hello everyone, and see you again in the next episodes.